Hey guys, welcome back to the sixth episode of the Friday Ticker, where we're going to talk about compound valuation and growing your money in the stock market. And we're also going to look at a little bit of a myth that the finance media uses to sell you on compounding your money. So let's get into it. Now, let's first debunk this myth that the finance media uses. It's a little bit of gaslighting to try to kind of teach people how the stock market works, and it all has to do with the compound interest effect, okay? People kind of understand how banks operate where you store your money in a savings account, you collect interest, and then it compounds on itself. Well, they try to relate that to the stock market, and in my opinion, it confuses people. It confused me probably 15, 20 years ago, and they're still doing it to this day. Take advantage of compound interest. And unfortunately, I think that it does people a disservice. Okay. They're really not understanding what the stock market is. It's really all about market capitalization at the end of the day. And that the stock price is a representation of valuation for a company. And you're going to buy that company at a specific valuation. And the compounding is really and the compounding really all has to do with the valuation compounding. It has nothing to do with interest, okay? So I'm going to give you guys a few examples of how this works with some real dollars and some stock prices, and you'll kind of get a feel for what compound valuation is really all about. And this is how you build wealth at the end of the day. Even if you own your own company, privately, you can have valuations that financial teams can actually value your company at. So this applies to private companies as well. So I'm going to switch over here to my iPad and let's do some examples. Okay, let's assume for a moment that you're interested in a certain market. Maybe it's the AI market, right? It's a hot market. You think that for the next 10 to 20 years, this is going to be the economic wave that you want to be a part of. So you're going to invest in AI X. X is an unknown company. It's just a fake company. And that fake company is trading at $1. Now, this might be an expensive stock because at $1, the market cap could be $1 billion. You know, I've seen stocks traded at $1 that are $1 billion in market cap. So it could be expensive. That's up to you to figure out. But let's just assume, for sake of argument, you decide this is it. You know, I'm going to put $10,000 at $1 for this stock. Okay. So you own 10,000 shares, $10,000, and you know you're sitting there. You're going to invest for the long term. Now, when this stock is trading at $1, you're going to see moves probably in the space of like maybe 5 cents up to where it's like, oh, now it's at $1.05, right? Or it could go 5 cents down, and we could lose some money. It might be trading at 95 cents, all right? And, that kind of a move is a $500 move for you with your $10,000. That's where you'd be up or down, okay? So, that's about a 5% move for you. And, this might trade around here for maybe a year, maybe 2 years, 3 years. Who knows what it is? It could trade up to maybe even $1.20. You could be up 20%, which is $2,000. That'd be kind of nice. But, that just gives you an idea of where something is going to trade at $1. Okay, it's typically going to be around this 5 cents, maybe even 0.01 cents, a penny. On average, that's what it's going to trade at. But let's kind of erase this. And let's assume that, the company grows a bit and the stock market decides to price in some growth for the company. And now it goes up to $2 a share. Okay. Now, what does that mean? That means that you made a 100% gain on your money from $1 to $2. Now, you made in 100% gain another $10,000 in profit. Okay. For a total of $20,000. Pretty neat, huh? So Let's take another scenario, okay? That's so that you understand how to double your money, okay? Let's assume that the company comes out with something remarkable. And now, instead of the stock going to $2, it goes all the way up to, sorry, I'm going to draw a cleaner arrow. It goes all the way up to $10 a share, okay? At $10 a share, you've done more than 100%. You've done 1,000% gains in the market. Okay, that's also called a 10x, or you could also call it a multi-bagger. That's kind of the slang that the stock market junkies use. And now you've gone from $10,000 all the way up to $100,000, right? You think you could retire on that. Nowadays, not so much, right? So you're sitting pretty good, but you really think that, man, this company's going all the way. It's going to Pluto, not the moon. It's going to Pluto, okay? But let's talk about what's happening at a $10 valuation. It's not a valuation. It's just $10 a share. Maybe the valuation's at $10 billion, you know. Maybe the company at $1 was at $1 billion. Now it's at $10 billion, okay? So let's start here at $10. Okay, now the stock is going to trade a little bit different. Okay, you're going to see volatility that's maybe, let's just say 50 cents, right? It might trade up to $10.50. Okay, that's a 5% move. And now, you know, back when it was $1, the amount of money for a 5% move was $500. Well, guess how much it is now? It's $5,000. That's the kind of moves you're going to see on a daily basis. Maybe it's 5,000, maybe it's, you know, 2,000, depending on the move that's happening during the day. 5% move is kind of maybe average, maybe a little above average, whether it's to the upside or the downside, okay? So you're going to see your money moving quite a bit at $10 a share, okay? So now you're kind of understanding how people feel when they are invested for 10 or 20 years, when they've 10x their money. They're seeing bigger moves. It's not $500, it's $5,000, or it's $10,000, you know. You can easily lose $10,000 on a single stock if you're holding 6 figures in it, okay? But now, you know, let's say in 5 or 10 years, the company has continued to execute. Maybe new products have come out for that company, and the market decides to price in another 10x, okay? Now from $10 a share, now it's going to go all the way up to $100 a share. And you've made it. You have made it. You've made another 10x on your money, okay? You had 100K in at $10 a share. Now you're at $1 million. Even still, you probably can't retire on $1 million. Maybe some people can. If you have low expenses, you probably can do it. Now, the question is, do you keep your money there? Because now you're going to feel a little bit different about things. Let's go back. And now, let's go with 100 a share. What's happening there? You know? So, let's take a 5% move. That's $5 a share. Okay? So we're going to be at 105 here. The way that's going to feel is that's going to be $50,000 in one day, guys. And then on the downside too, you know, let's say it goes back down to $95. I've been trading in Target. Target's trading around $100. Now that'd be a big move. That's a 5% move, but it happens. I've seen Target been going down like $2 or $3 a day. So that's not too far off, to be honest. So now you've lost 50K in one day in the red. You know, this happens all the time. Here, we'll circle it in the red, you know, and then over here is in the green. You were happy that day, right? This is kind of where I've been a little bit. I don't have $1 million in Tesla. I've got around 600,000, and I've seen days like this. I've seen $50,000 days. I think the most I've ever lost in one day was maybe 75,000, like usually including Tesla stock and maybe some other stocks because it was like a nasty red day in the market. But that's how compound valuation works. It really doesn't have much to do with interest at all, okay? We can talk about dividends maybe in a future video. We can talk about how dividends lower your cost basis. I'll do a whole nother video on that. Maybe next week we'll do that. But for now, I just want to talk about compound valuation because, you know, a lot of the hot stocks today, even the Mag 7 stocks, not all of them have dividends. The ones that do are like super tiny, so they're not even really relevant. It's all based on valuation at the end of the day. That's where you're getting your growth. So, you know, that was my kind of hypothetical example for you to understand how this works. And again, if you 10x'd from $100, you'd be at $10 million. And then a 10% move would be, guess what? $1 million, guys. And that's part of the reason why, you know, big money and high net worth individuals, they don't like to put 10 million into a single stock because they can't deal with the volatility of a 10% move. And, you know, to the downside, you're looking at $1 million, right? You're probably going to be buying things like the SPY and the QQQ, which typically only move, you know, 1%, 1.5% to the upside or the downside. We do get days where you'll get 3% down days, even 5%. I've only seen 10% like once or twice, I think, in my life. You know, during March of 2020, we saw that quite a bit, so on and so forth. But, you know, it is what it is. That's why people do invest in those bigger instruments, is because they don't want to feel like they lost $1 million in a day. With individual stocks, you can easily get a 10% day. I've seen numerous 10% days in Tesla and other stocks. I'll give you my take on like where I'm at with Tesla, how it worked for me. I bought it in 2019. I bought 80 shares at 247. The stock had split twice, which doesn't increase the valuation at all. A lot of people get confused about that. It's just kind of like this... It's this way to keep the stock price low so that people can trade options for the most part. And it helps retail investors buy the stock at a lower price for single shares versus fractional shares. But anyway, so when it split, I got 1,200 shares and it lowered my cost basis to $16.50. And for the total that I purchased, it was all in one purchase. It was around $20,000, just slightly lower than that, but we'll just go with 20K for this purchase. And I'll start with kind of the price so we can kind of get a gist of how this worked for me. So it's what happened there? There we go. It's $16.50 was the price I was at, and I had 20K in value there. And so the first doubling would be at, or the first 10x would be at $165 a share, which it's well above that now. So that was my first 10x. Okay, and my second 10x was when 165 doubled again, and that doubled to $330 a share. Okay, that's my next 10x. Now, from 165 to 330, that's only 100%, basically a 1x for someone who buys at 165. Okay, but if you bought earlier, okay, you got lucky and you made the right move, you had a 10x here and a 10x here. So from 20K, I went up to 200K. And then from 200K, which is just a doubling, I went up to 400K. Okay, now obviously the stock is trading around 420 a share, so I do have more than 400K on that position. But just for exercises, I'm kind of just demonstrating what this represents. Now, again, coming back to how I think of this, at $330 a share, if it was trading around there, a $16.50 move to the upside, I'm up my original amount, $20,000. Every $16 that this thing moves, I double my money from my initial investment of 20 grand. Vice versa on the way down, I'm going to lose $20,000 if it goes down $16.50. Okay. Now, if the stock splits again, let's say I get a 10 to 1 stock split, my 1650 is going to go down to, I think, what, 8.25. Okay, so then every $8.25, I'm gonna get that $20,000 to the upside or the downside. Okay, so if that just gives you an idea of how stock splits work, it just lowers your cost basis a little bit, but the stock price lowers as well. So it's really not any of a difference, to be honest. But let's look at that $330 a share. This is what I'm looking at right now. Again, I'm not a financial professional. I can't tell you what to do, when to do it, how to do it. I can't tell you to go out and buy Tesla, okay? It's a highly priced stock. You got to understand and have a lot of conviction in that name. You got to understand the direction it's going from an AI perspective, you know, to be bullish on that stock like I am. And this is what I'm looking at. I'm looking at 330 is going to double one more to 660, right? For that, I would go from 400K to 800K. And then the days, you know, if I had a 10% day, I'm going to lose 80 grand on that day, right? Now, it's funny. I just got a comment on one of my videos talking about Tesla. And the commenter goes, well, I think it's going to $7,000 a share. Because I put in that video, I think it's going to maybe $3,000 a share in 5 or 10 years. So, but hey, let's take that guy's argument. Maybe let's do another 10x from here. From 660 to 6,600 a share. With a 10x, if I'm at 800,000 here, 800K, this is going to $8 million. Okay, multi-millionaire status. Okay, everyone dreams about that. Now, do I think that's going to happen? Probably not in reality. If it does, great. But if I keep holding that stock, and I have a 10% day there, I'm going to lose $800,000 on a 10% down day, or even a 10% up day. I'll make $1 million almost in one day. That's how the stock market works, guys. It's crazy. And a lot of people don't understand this thing. They struggle to figure it out. And I think part of it is because the finance media talks about it like it's compound interest, like you're in a savings account at the bank. You know, I get that and all that, but just talk about the real nomenclature of the stock market, and it's really all about compound valuation at the end of the day. And dividends, you know, we can talk about dividends. We'll do a future video on that, but I just think that the finance media needs to really say what it should really be. And that's just my take on it, because then it would like teach people about, oh, here's what they would talk about market cap a little bit more. And then people would be like, oh, what's market cap? What's that all about, right? That's how people need to learn about the stock market, is the fundamentals. And that way they feel comfortable and have conviction, because if they get gaslit into thinking it's this interest rate that you get this, you know, this yield and you get interest that goes back in your account, that's just not how it works, you know? It's on valuation. You can go down. The day you buy a stock, typically, it's going to go down and you're going to lose money. And so, you know, hopefully we can kind of spread this message a little bit more, us finance gurus in the stock market. I know there's some other good content creators that do talk about this quite a bit, but there's kind of like some, you know, kind of finance media personnel that just, they don't say this kind of stuff like I'm talking about. So anyways, I'm blabbing here, but hopefully you guys learned something in this video and gotten a little bit more conviction on what the stock market's all about and what compound valuation is all about. If you guys have any questions, comments, let me know in the comments below. And if you guys could, like and subscribe to the video, like and subscribe to the channel, take a look at my previous video, and everyone have a great day. Thanks. Bye.